and let me now shift focus to autos. We've got Gunjan Prithyani, Senior Analyst, India Auto and Auto Company Components, joining in from BofA Securities from the sidelines of their conference right now. Gunjan, good to have you on the show today. Let me start off with the EV story. While in India, we're now hearing that EV division of select companies are contributing very positively in the overall numbers. But on demand, we're still seeing a bit of a stall in the pace of the EV adoption globally and even in India. Tell me, how is it that you see the adoption rates moving?
Starting on the EV story, I think clearly, of course, last couple of years have been quite positive on the EV adoption level. Having said that, if you actually look at last 6-9 months, there has been a sort of plateauing on the curve. Now you can call it combination of issues, initial, a little bit of product issues, a bit of still not acceptance on the range anxiety, charging infrastructure issues. So there are little bit apprehensions still there. So if you look at EV adoption in two-wheelers, that's sort of been at sub 6% for last few quarters, and that sort of also tells you that now it is more about differentiating on product rather than differentiating on the total cost of ownership. I think the point that you made around the profitability is something where I think I'll sort of concur with you. Initial last few years were more about, chasing market share, getting growth in the business, penetrating into newer cities. But I think it is more now about how to balance the profitability with growth. And we are certainly seeing some positive move in that direction, given combination of PLI, price competition receding, improving cost curve, etc. So I do think now we're getting into a stage where it becomes more a product-led story rather than just keep fighting on the price.
With respect to Tesla, we get to know that they are not interested in manufacturing in India. And I believe this news must have given some respite to the traditional OEMs. But should one read into this? And also, do you think India is still a retail opportunity for Tesla?
Interestingly, has been in the media for over a year now that they are going to foray in India soon. I think as far as we understand, the plans are still very, very retail-led. And as you mentioned, there is no manufacturing plant on the table yet. And hence, I'll sort of look at it in two ways. One, if they were to import their current model, current models available in global markets at a concessionary duty, they would still classify as niche premium. So I think the implication for the larger listed space would still be very limited because the price points would be certainly upwards of 40 lakh or so. So in that context, it is very limited impact on the listed universe at this point of time, given manufacturing is not on the table right now. I think the second bit which we tend to usually miss is it is not so easy to gain market share in Indian car market. We've seen foreign car makers come for last decade and they've been marginalized, they've exited. So beyond product, Indian customer is very tough to please. You need a good design which is locally designed to suit the customer taste. You need top of the specs. You need to price them competitively, right? So, and to top it all, if you don't have a service network, brands do fail. So I think it is not just about getting the product to the market. Penetrating Indian market is a longer story. So I would at this point of time say that this is very premature to react to Tesla foray. We don't know enough on their plans for the next 5 years, but very, very initial stages, it seems limited impact on the listed universe.
All right, Gunjan, now let's talk about the different segments because what we get to here, let's start with the PV industry, expected to show a growth of just 1 to 2%. For two-wheelers, it's just a single-digit growth expectation. CVs have their own troubles and now it's just tractors which is showing some bit of a growth. But amidst such scenarios, Gunjan, where is that you are finding an opportunity?
Sure. So I'll sort of cut it in two parts. I think your point is very valid that if I look at the sub-segmental trends, other than tractor, we're really not seeing growth in any of the other sub-segments, be it two-wheelers, PVs or CVs. And as we get into the next couple of months, it is a low season given monsoons. There is also very lack of new launches on the horizon, which would mean that we will sort of see these muted trends continue in the near term. So I think some case for consolidation in the near term. Having said that, I am actually not as negative. I do think as we get into the second half of the year, when you see launches picking up, you see rate cycle easing reflect, you've had income tax relaxations, I do think that we may have some recovery starting to come through in the passenger vehicle space as well. So, if I have to put in my pecking order, it would be tractors followed by passenger vehicle, where I think there is a case for recovery as we get into the second half of the fiscal, led by the pickup in the new launch activity. The only point I'll sort of go back to the growth outlook that you put forward. Yes, when I look at the growth outlook across sub-segments, it is a valid argument that it is no longer double-digit growth. I mean, at best, we're sort of looking at mid-single-digit growth across various segments. So growth rates are converging across sub-segments, and hence the way you position in these spaces, where can you get market share, where is the export story looking exciting, where is the level of EV readiness. So combination of these things will drive the outperformance rather than playing one sub-segment over the other.
Right. What about Indian companies then, which have proved their prowess in the two-wheeler export segment, and now passenger vehicle companies are talking about growing in exports? But given the global growth slowdown scenario, when we hear major OEMs either cutting their guidance or taking it back, do you believe export plays can still do well?
I think the optimism on the export story is more on the auto OEMs. If I look at the four-wheeler space, we're suddenly seeing rise of India as a export, as a market to export out to Southeast Asian countries, and we can see that in both the two-wheeler as well as the passenger vehicle exports last year. If you look at two-wheeler exports, they were 20% up last year. Passenger vehicle, again, if you look at the leading names, they were mid-teen growth last year. So it's a strategic change that we're seeing in the mindset of the four-wheeler OEMs, that use India as an export base to export out to some of these Southeast Asian countries. And the key markets you look at for the auto OEMs are essentially Middle East and Africa. Again, Africa is a market which has gone through a bad macro for the last couple of years, and you're sort of seeing a cyclical bounce back in the African markets. A new piece which has come through is, of course, LATAM. Brazil in particular is something that practically every company is now setting up CKD facilities and making good inroads. So it'll be tale of two cities. I think export story is certainly a lot more exciting with the two-wheeler and the four-wheeler OEMs. Ancillary, yes, there is a lot of uncertainty to navigate over the next 12-15 months.
So beyond 12 to 15 months, if someone has to draw the bigger picture, then how will you picture auto ancillary space, any particular area of liking within that?
Oh, certainly, I think that's a very interesting topic you bring up. I think there is a headwind when I look at growth for next 12 to 15 months. But if I sort of zoom out and look at the opportunity for the ancillary space, I think you're certainly seeing three themes play out. You are seeing a common narrative from every auto ancillary company that we are trying to also look at non-auto as a segment. We've seen defense, we've seen railways, we've seen aerospace, a combination, consumer electronics, so combination of newer segments which these companies are adding. And mind you, these companies have dealt with scale manufacturing, can manage complex supply chain, MNC customers. So it's a larger theme that you can see playing out over the next 3 to 5 years. The second theme that you're sort of seeing is M&A opportunities. Yes, there is a lot of stress in global autos given tariff-related uncertainty or global macro being slower. I think there are opportunities of M&A which are cropping up. We've seen some over the last 12-15 months that some of the ancillary companies have looked at. So some delta from there. And lastly, I will sort of talk about the China decoupling or the reshoring that we're seeing, very early stages. But I think India does stand a good chance if we start to see some of the global auto companies look at India to diversify their supply chain. So it is an interesting space to be in with a 3 to 5 year view. But certainly, next 12 to 15 months look a bit tricky to navigate.
Lastly, Gunjan, with respect to the valuations, how do you see the Indian auto sector placed at this point in time? What's your take?
So I think on the valuations, there are two ways to look at it. One is when I look at the sector on an average, I don't think I can say that autos is trading at a very expensive multiples. I think, when I look at the two-wheeler space, the average multiples would be somewhere in the range of about 24, 25p. But mind you, there is a dichotomy between the players who are gaining share and the players who are, not doing so well in the domestic market. So I think, investors are very clear. They're willing to pay multiple if there is market share gain and growth outperformance. Whereas if there is any bit of slippage on the market share, the stocks do get penalized. So there is a dichotomy for sure when you look at the two-wheeler space. I think on the passenger vehicle side, valuations do seem reasonable across the board. Most of these names are trading at sub 20p, 21, 22p if I look at 1 year forward basis. I think what is generally needed for sentiment to improve on some of these names is the growth outlook. There has been last couple of quarters have been weak for passenger vehicle industry. As you sort of see the growth improving on passenger vehicle and the launch cycle coming through, you should see multiples sort of catch up a bit on the four-wheeler side. So I would like sort of sum up saying that valuations is not an area of concern in autos. If you gain market share, you do get rewarded better. But it is essentially more about getting more comfort on the growth outlook for the various subsegments. As that comes through, you should see some valuation catch up, particularly on the four-wheeler space.
Right, Gunjan. So good having you on the show today and, helping us analyze what exactly is happening within the auto and auto ancillary space. Good speaking with you today. But let's now welcome on.
If you like this video, then like, share and subscribe to ET Now.